afternoon. Welcome to Closing Trades right here in ET Now with me, Aisha Faridi, Anisha Jain as well in the studios. And for the markets, it's not really turning out to be the best of trading sessions. While yesterday, yes, you could blame it off all on IT. But today as well, after a quiet start and then just picking up a little bit, we're actually now standing at the low point of the day. While it's not a very deep damage, we've sure had worst of days. We're around that 17,688 level for the Nifty futures. But we're off the day's highs by a good 150 points in the Nifty alone. The Nifty Bank as well has slid a good 400 points from the session top. There has been chatter around perhaps some capital gains tax changes or change in the tax laws, which clearly has been spooking the markets. The broader markets, though, today at least, are managing to outperform, though within the F&O markets, it's pretty much a neck-and-neck market breadth that you are currently seeing. It's pharma and real estate all the way that are actually outperforming. Shobha, DLF, Oberoi Realty, these are all stocks which are holding out very well. Pharmaceuticals, in fact, is a top sectoral winner today with Lupin, Biocon, all of them looking very, very smart indeed. And then, of course, you've got a very crucial week of earnings or days ahead. HCL Technologies reports its numbers on Thursday. Friday, you've got Reliance, although post-market hours. And then Saturday, as always, it's ICICI Bank's turn. But yeah, for the market, we've gone a little bit quiet.
Oh, well, yes, we've gone a little bit quiet, and I think what really spooked the markets is that tax report that you talked about. But I think this is a bit of a departure from what the finance minister actually told Nikunj in her interview, when she pointed out that they are looking at stability as far as the policy is concerned, and the idea is to keep the continuity as well. So a bit of a departure. The street is for now a bit tentative about it. However, speaking with experts, they're saying it's a little bit too early to even discuss this. This point of time. We don't know what kind of potential changes they are talking about, etc. In fact, before we move forward on the show, let's listen into the bite coming in from the finance minister, where she talked about continuity being the key pillar for this government.
The fact that there was no change in the capital gain structure this time, can we assume that this is some kind of an endorsement by the government that equity will get a preferential treatment?
We don't want to keep changing too many things in too few short time. Capital gains tax, the last amendment was probably in 16 or 18?
2018.
18. And subsequent to that, ideally even 3 full years of not even they have gotten completed. So do you want to change the policy immediately? No, you would want to see how it works out.
Okay, so that's the soothing voice, at least for now. That's what we'll go by, because that's the only commentary that we have from the finance ministry at this point of time. Markets at least holding on to that 17,600 mark, though the broader markets are definitely outperforming. Pull up the mid-cap index and even the advanced decline ratio for that matter. They are faring a lot better than what the headline index is telling you, because the headline index is being dragged by Reliance. That's alone contributing almost 30 points to the Nifty slide as well, given the fact that earnings are expected later in the week. And as we pointed out, pharma and FMCG, these are the defensive plays which are working out better for the market. But where do we go from here on? Let's welcome on board our technical experts on the show as always, Kunal Bothra and Nuresh Mirani, joining us to talk to us about that. Kunal, you go first. As far as the market setup is concerned, is it back to that 17,600, 800 kind of range, or do you expect a bit of a momentum pickup maybe later in the week? Kunal, the question is for you.
Good afternoon, Anisha. Good afternoon, everyone. So, my sense is over the last couple of days. Yeah. So my sense over the last couple of days, we've been highlighting that the markets or the indices specifically could get into a bit of a consolidation. So I think we've managed to hit that consolidation mark. 17,800 seems to be a resistance broadly on a closing basis. We managed to scale past about those levels once, but I think we've not been able to sustain about those levels. So that indicates that it's a crucial resistance for the index. My belief is that it's a few days of consolidation as well as maybe a few days of correction for the indices, but that should be taken as an opportunity to buy the index. Short-term traders who have been, in fact, been unable to time the index, I think at current levels of 200 to 50 points down from the 2-day, 3-day swing high. I think it's a good entry point for us to try and chip into the Nifty specifically. So my view is bullish on the index, specifically on Nifty, and I think at 17,600 approximately where we are trading right now, it's a good zone where traders could look to even enter.
Right. Nuresh, hi afternoon. Are you worried about this fall from the day's top? The fact that Nifty Bank alone has lost about 400 points?
Not really. So it got triggered by an article on LTCG, which just does not make sense because the whole article points something which could happen in the future. It's all rumors. But the market is touchy about this topic, and that is where you see this correction. Globally, nothing has happened. So overall, after this move from 16,800 to 17,800, the market is a little heavy. So any bit of negative news can keep seeing this volatility, and we are more heavy. So like I said in the morning, 1,600 is where you want to buy 550, 600 zone. We would tested that and we bounced back from it close to those levels. And overall, going forward, this range should continue 17,600 to 17,850 for the near term. And once we sustain about 17,850, the next one is 18,150 to 18,200 band. So overall, the bias is positive and continue to be a buy on dips for the index, specifically on the Nifty. Bank Nifty has not dipped much to give an opportunity in a similar way.
The sector of the day or the flavor of the day is clearly pharma. So let's go across to my colleague Somit, because there was a fresh note that Morgan Stanley wrote this morning. They are talking about the 5 reasons why one should be constructive on the sector. I think the topic is Sun Pharma, right, Somit?
Well, JP Morgan has come out with this positive note on pharma sector, and they have stated out 5 reasons why one should be positive on the sector. Now, the first reason is they're saying that the India portfolio is likely to witness the highest price increase this year. Now, they're expecting a 12% price hike for the NLEM portfolio, which will be the highest in this segment, while for the non-NLEM portfolio, they're expecting a price hike of around 10%, which is allowed by the government. Now, if you see in the last couple of years, the margins of these pharma companies were squeezed on the back of pricing pressure seen in the US generic market, and also because of higher input cost. And now this is expected to reverse in the coming year, because the US generic price erosion has relatively moderated, while the input cost have softened, and both these factors should aid the margins of the pharma companies in the current financial year. Now, the fourth reason is that they are seeing opportunistic gains in the US market arising on account of increased drug shortage and supply disruption, which should aid the demand for the Indian pharma companies. And the last reason is the valuations are reasonable. Now, if you see Nifty Pharma Index relative valuation compared to the benchmark is on the lower side, while the sector's earnings is expected to grow at a CAGR of nearly 20% over FY22 to FY25. Now, the two top picks for JP Morgan is Sun Pharma and Cipla. They are bullish on Sun Pharma on the back of solid domestic franchise, continued ramp up in specialty business, reducing generic exposure and reasonable valuations, while they are bullish on Cipla on the back of continued outperformance seen in the Indian market, strong traction seen in one of its key products in the US market, while the risk reward is also favorable after the recent correction, according to JP Morgan.
Right, Samit, we leave it at that. We're going to pick it up from there. Look at Lupin, that's up 6.6% in the futures today. Divi's up 3.5%. Cipla as well, higher by 2% as we speak right now. Kunal, are you scouting more opportunities within pharma, and does it look like that sector which can sustain gains?
Well, it looks like, Aisha, because the buying seems to be quite strong. The patterns which have been formed for the pharma stocks are not a single day pattern. Now, for example, I think 3 or 4 days back, DV Slab was one of the first stocks which actually moved up higher. It was led by some positive expectations across most of the pharma stocks, Granules, Laurus Lab that day. All of the stocks, I think last week it was, that these stocks had moved up higher, then followed by 2 days or 3 days of consolidation, and today you're seeing these stocks making a fresh swing high for themselves. What I like about today's move specifically is that other than the last week's mover, you also have the likes of Cipla, which has managed to cross back about the 900 levels, Lupin, which is one of the best performers from the pharma pack in terms of the percentage gains today. So many other formidable large cap names or the erstwhile corrective guns are also making a comeback for themselves. This, I believe, could be a strong indication that we may potentially see a strong reversal. But this also would probably mean that we may not go all out into the all of the pharma stocks. You still have to be very selective in the kind of stocks which one should be picking at current levels. So I will stick to the likes of DV Slabs, Lupin, Cipla at current levels, and once the move migrates towards the higher zone, that's where we will probably shift towards the slight high beta pockets, high beta names within the pharma pocket.
Okay, so that was about the pharma space, but let's look at some of the other counters which are reacting to news flow as well. Tata Chemicals is the stock which has taken a knock of almost 6%. Kotak actually came out with a note this morning talking about how the soda ash prices have been cut by anywhere between 2 to 5%. It applies only to the India business, but remember that forms almost 13% of the EBITDA contribution, and the price cut is likely on account of the demand softening as well. So overall, a bit of a negative news coming in for Tata Chemicals. Just Dial is the other one that I want to talk about on account of the earnings reaction, and even Quick Heal on a similar peg. Given the fact that Just Dial is actually trending higher, the margin performance was rather stellar with a improvement of almost 200 basis points sequentially. So that stock holding up with a gain of almost 4%, though it's off the highest point of the trading session. And then you had Quick Heal, which was down about 7%. Because the company reported a loss at the EBITDA level versus a profit last year, and the revenue is down as much as 50%, so a sharp knock of 7% on that one as well. In fact, let's go across to Lisa. She's joining us to talk to us in detail about Tata Chemicals because the stock is taking a beating. Tell us more, Lisa, what does it mean for the company if the price cuts are taken to the tune of 2 to 5%?
Word came in from the brokerages that Tata Chemical has reduced the prices of its soda ash prices between 2 to 4%, and that is affected since yesterday on both the light as well as the dense soda ash prices. Well, this is the second price cut that the company has witnessed in the last 6 months, as the last price cut was taken way back in November, where the prices was reduced to 36,000 per metric ton from 37,500 per metric ton. Kotak is of the view that the price cut has been on the back of falling China prices seen since mid-March, and the prices in China are falling because of the unexpected news of capacity influx that is happening in Inner Mongolia region. So that has contributed to the fall in China prices. Also, the price cuts apply only to the Indian soda ash business as of now, which contributes around 30% of the overall EBITDA. But the medium risk lies that this may spread to the other geographies as well. They also highlighted that demand softening can also be one of the reasons which has led to the price cuts. And they added that the recent correction in the coal as well as the energy prices, that is expected to aid margin and maintain the margin trajectory going forward. So now we try to connect to Tata Chemicals management. However, they remained unresponsive owing to the silent period being observed by the company. So Tata Chemical is on the downward trend basis this price cut.
Right, that's Tata Chemicals languishing by about almost 6% nearly as we speak right now. Besides the spot of green that you're seeing across the pharma universe, and by the way, Oro Pharma and Biocon as well have spurted up nicely, almost about 3.5%. There's Bandhan Bank also holding up 3.5%. And BHEL has made a very strong move. Another 4% shot up is what you're seeing on BHEL. That stock will just come up for you on your screen. 75.30 is where it is. Naresh, we always track L&T, but what about the charts on BHEL?
So I covered it as a bounce back trade right from 70 odd levels when it made the first recovery. Today is the strong move, and also it's a breakout of a falling trend line. The recent swing high in March was around that 76 mark. That is the next point where if it sustains, we would go to that mark of 80. Overall, the trend has reversed from the lower levels. Eventually, the stock could actually go towards 90. And the whole, capital good names have really done well. BHEL was the only one lagging behind. And I think there's a time to catch up. So out here, even at current levels, it's a buy with a medium-term target price of 90 to 100.
But a lot of stocks are actually sitting at 52-week highs when it comes to the broader markets as well. Kunal, specifically, I wanted your take regarding JBM Auto, and the other one is Cyient. Rest of the IT pack is actually trending at 52-week lows, and Cyient is the only one which is up 3% today and at 52-week highs.
Yeah, Isha. So Isha. So I think I'll start off with Cyient because that's one of the stock which has done actually exceptionally well over the last 2-3 months. Now, I think Feb 2023, the stock made a low which was I think around 900 mark, and from there it's gone to a pattern of higher highs and lows, and this has been more like a consecutive pattern for Cyient. So doesn't come as a surprise that the stock at current levels is also showing signs of strength as well as continue to make a fresh high for itself. This means that the trend is intact. The volumes have been stable, and the price and the buyers are staying intact with their position. So it's a sign of strength, and possibly if the trend sustains, we may expect at least another 100 rupees on the upside. So 1200 could be a potential target for Cyient over the near to medium term. JBM Auto could be an interesting case because as of now at 780 approximately, the stock is at from its 200-day moving average. So the 200 DMA is at 450 levels. The stock is at 780 plus. The divergence is quite exceptional in terms of the long-term moving averages. This may not be sustainable for a longer period of time. So I think it makes a lot of sense to book out profits for traders who've been long into the stock price. My sense is the stock may go into a correction. Even if a minor mean reversion takes place, we may expect a correction of at least 5 to 10% into the stock over the near term.
Okay, on that note, we'll slip into very short break. So JBM Autos is perhaps a candidate where you can book profits, but Science is something that might head towards the 1200 mark. Slipping into a very short break, don't go anywhere. Welcome back. Well, not much more at the index level. 17,650 thereabouts is where we are at. But in terms of the price volume action, there are a lot of movers from the broader markets. Let's start with Tata Communications, which has actually seen a breakdown from the upward sloping support. It slipped below the 50-day moving average. And remember, the company reports its Q4 earnings tomorrow. So ahead of that, there is a bit of volatility on that counter, sitting with a cut of around 2.5%. Shifting focus to Lupin, because that's definitely quite excited in the trading session today. It's seen a breakout from the reverse head and shoulder pattern, surpassed the 50 and the 200-day moving average today. And the volume too on the heavier side, almost 4x of the usual average that we see. IDFC twins are also in focus. IDFC specifically has seen a breakout from the 4-session consolidation and has surpassed the 50-day moving average as well. And the volume too, twice the 10-day average that we have seen. Naresh, wanted your take regarding the entire, these banking names. So IDFC twins, of course, on account of this price volume action, but separately you have names like Yes Bank, which is up 7%, Indian Bank, Punjab Sind Bank, they're all gaining ground. Any name that you would want to suggest?
So out IDFC First Bank is the one which I'm looking at closely. The stock made a huge move from 30 odd levels to 60. Topped out in end of December, and since then it has been making a classical triangle formation. The range has been consolidating, contracting, say from a range of 60 to 52. Now the 2 to 58. Today the stock came very close to 57 odd levels. So this is a stock which can break out above 58 and make a fresh move, wherein again go back to make a move towards 70 odd levels. So IDFC First Bank looks interesting. The other one is RBL Bank, which again has seen a similar contraction in range. Stock went from 80 to 190 levels, corrected to 135, 140, and now has started making a comeback. So these are the two names which could be interesting in the small cap banking names. And IDFC Limited in the NBFC space, it's if you adjust it for the dividends, the recent swing high would be closer to that 82 mark. Above 82 would be a good breakout. And that could take it to quickly to 95 odd levels. So the three names would be IDFC Twins and RBL Bank.
Okay. Meantime, realty space is one entire sector which has been buzzing. Not only today, if you look at the weekly or a 2-week chart as well, that's been gaining ground since that pause has been announced by the RBI. So the entire affordability argument seems to be working out. In fact, we spoke with Gulam Zia of Knight Frank as well as Bimal Sharma of the transaction service at CBRE to understand how the pricing trends are likely to move for real estate. Let's listen in to what they had to tell us.
Every market is different and behaving differently. And depending on the product and the developer, the quality, the pedigree, the sales are moving. And likewise, the prices are moving up. The current sustenance of the demand shows that we will have continued improvement in the pricing as well, that the market will see.
The price rise, say, within NCR, say, Delhi, or within Mumbai would also vary from pockets to pockets. So gone are the days when you used to see a price rise all across, very, very democratic, all through the real estate market of the country. It is not so anymore. So good developers, good products are in demand, and that's where the price rises would be very visible. And at the same time, there would be, below par kind of products and not very well-known kind of a developer in the same market. Like even in Hyderabad, I can talk about a few such locations or developers where they're not able to take the prices up at all in last 2 to 3 years. In fact, some of the inventory, which is lying unsold for a long time, age of the inventory as a concept also has to be taken into consideration. Apartments which have been sold for last 2-3 years, for example, are not finding any takers. So there, the discountings are also coming in. So overall, the price rise of about 6 to 7% that we see all over when I take the weighted average is a reality. The best of the products would perhaps be getting say 10 to 12% of a rise every year on year. Wherever the rents are going high, the sales will not go as high. Because why are you renting? Because you don't want to buy today. So the demand for rent shooting up is one thing that is emerging wherever the rental rates are going high.
Naresh, where within realty are you finding opportunity and beyond DLF?
So watching out for say smaller names like a Brigade, which has given a fresh breakout. The stock for the last 6 months had a top around 500, 510. That is a stock which is breaking out. Same is the case with Prestige, which has broken out in the near term. So a lot of smaller names have started to make interesting moves. So looking at Brigade more closely, that's an interesting case. Godrej Properties would be looking at it on a dip. The only problem with the DLF and the Godrej Properties is they've moved up 10 to 15% really sharply. I would wait for some bit of a retest or a fade off move. That is the time I would look at it. But for now, Brigade looks interesting, which is a fresh breakout.
Okay, so that's the top bets coming in from the realty space. But let's welcome on board Vineet Bulanchkar as well. He's the head of research at Venture Securities. Vineet, let's start with the real estate sector itself. Any names that make it to your favorite list?
No, I have a small cap stock called DB Realty, which I believe can do well. It's a high risk, high gain kind of story. But I believe that in this sector, all the corporate governance issues are out. Prestige has stepped in. The debt situation has eased, and they've got significant amount of projects which are coming on stream. The cash flow of which should start flowing. So if one were to invest in this stock for a slightly longer tenure of 3 to 4 years, one can, get very, very good returns out here, which can be sort of a multi-bagger in the making. But I would still like to reassert that this is a high risk, high gain kind of a story. And that's that.
Reads also.
Right. Okay, that's the take coming in on realty. But Vinit, just wondering, what are you hoping to hear from the rest of the IT pack, and especially some of the mid-cap IT names after the commentary that we've heard from both TCS as well as Infosys?
So, we have spoken in our multiple shows over the last few weeks that we continue to be bearish on the IT sector. We believe that the pricing power is a challenge, and volume growth is also being a challenge. So we believe that, there could be a slowdown for the next 2, possibly 3 quarters. So until that situation does not, we sail through it with tweaking of the business model, controlling costs, I think it will be very difficult for the companies to kind of show any kind of growth. So in line of that fact, we remain bearish on this sector and would recommend investors to buy into more domestic stories. We like consumer and autos, where we believe that the growth is just picking up in the retail segment, and that is expected to drive the index forward.
Names in autos and consumption specifically.
So in consumption, we would go with stocks like HUL, Nestle. Nestle remains our top pick. We like Gillette. It's a stock which is not in kind of favor in the market, but I think they've done substantial work to try to get their mojo back, and be seeing periods of market share gains coming through. Especially in the auto sector, we like Eicher Motors. We believe both the Royal Enfield platform as well as the VECV, the CV subsidiary, are doing extremely well. And with Royal Enfield looking to launch 28 new products in the next 5 years, I think the going is good. They're getting market share gains in North India. Globally also, they are well set with almost 150 plus touch points from 10 to 12 touch points in 2016. So they've come a really long way. And in terms of profitability, distribution, product appeal, and lack of competition, makes this a very, very strong buy in our opinion. And I think that 30% growth over the next 2 years is a very, very strong possibility.
Right. Okay, let's get in some mid-cap ideas as well. Kunal, what's on your list?
So, actually, looking at the market texture, would suggest a couple of calls over here. The first one, which I would be suggesting, would be a buy on DV Slab. I think that stock looks extremely attractive. We've seen that the stock has confirmed a breakout of a higher degree chart from being a breakout earlier on a smaller degree time frame. So, would suggest a buy. Would revise the targets higher to 3,400 from my earlier given targets of 3,300, and stop loss could be traded higher to 3,155. The second would be a buy on Poonawalla FinCorp, a stock which we discussed in the morning. So listen on Chartbusters. Looks attractive for a fresh breakout. The targets which are revised on the higher side to 325 for Poonawalla FinCorp, and stop loss is traded to 296.
What about you, Naresh, in terms of the closing trades that you are executing?
So, looking at tires as a sector, which is looking interesting, and that is where Apollo Tires comes into play. The stock, after making a huge breakout above the 2018 highs, consolidated for the last 3 months. And over the last 4-5 sessions, the high was around 330. Today it has crossed. The all-time highs for the stock are around 340. So clearly leadership possibility here, wherein it could make a new move towards an all-time high. So expecting a move towards 370 to 400 in the medium term. So that's a buy on Apollo Tires for the short.
Right. Okay. On that note, we're going to take a very quick break. We haven't seen much of an improvement really in where the index is. Though 17,700 is back for the Nifty futures, we're down still about 50 odd points. Pound continues to be the story today. Quick break. Be right back with more. Okay, the aviation data has come out and Indigo market share continues to stand tall. In fact, it's the fattest of the lot at 57%, and that's an uptick on a month-on-month basis. Vistara pretty much flattish, and I think Air India also will just come up for you on your screens. But that said, for the market, it's pretty much a no-go. 17,700 is where we're pretty much stuck. Pharma, yes, is quite the story. So everything from a Lupin to a Biocon, Oro-Pharma, Divi's, Cipla, they're all holding a buzz. Wipro is making a bit of a move today. There is, let's see what Infosys is up to. Infosys is actually seeing a bit of a recovery and has had a very choppy ride, mind you, today, because twice earlier today, you've seen a bit of a dip come in for Infi. Right now, just marginally in the green as we speak. And I'm just going to bring up the rest of the idea as well for you and show you how some of the others are actually performing. It's really a mixed bag there. So while TechM is still a laggard, TCS is a little bit soft, LTIM is still down nearly about 1%, Persistent has shot up 2.5%, 3.5% uptick coming in for Coforge right now, LTTS is up 2%, Emphasis, HCL Technologies, Wipro, Birlasoft, Intellect, they're all actually gainers. Before we bring on board Anand Tandon, Anisha, let me ask you actually, because Infi TCS out of the way, but what do we expect from the rest of the pack?
Well, the expectations were muted itself, and now with the kind of numbers coming in from Infosys, they are paring it down further. So, for instance, for HCL Tech, which is later in the week, the street was earlier expecting 6 to 8% guidance when it comes to FY24. That's already been brought down to around 4 to 7%. So, in that case, the expectations have become quite muted. But now the question is, was that knee-jerk reaction enough to price in the kind of negatives that we are talking about or not? So that's what the market is trying to make sense about. But for now, the street is not expecting much. Though if any other company does come out with a solid disappointment, my guess is we are again going to see a bit of a negative reaction, because valuation wise, yes, obviously it's very much off the highest point that we had seen during the post-COVID era, but still they're not very cheap as compared to the 10-year or even 5-year average, and the growth rates of course have materially slowed down for especially the mid-cap companies, which were growing at a pace of 30-35%. That's expected to come down to maybe mid-teens, and that's what the street will start factoring in from here on as well, Aisha.
In fact, let's take it across with Anand Tandon as well, while we still have Vinit Balinchkar too on the show. We will get back to him later on. But Anand, if I could just ask you, afternoon firstly, as to what is the expectation now from the rest of the IT pack? Do you think there's anyone within the large or the mid-cap IT arena which can deliver better than what the market expectation is, which after Infosys is at rank low?
Well, from a broad brush perspective, I would think not. It's very difficult for large companies to be able to create any small significant niche which will be able to move the needle overall. So I think for the large companies, by and large, I think you've already got an indication of where the earnings for the near term are headed. The smaller companies, there may be some which may be, for example, focused on travel or some of the niches where it may be possible that a business is doing very well, and therefore they may continue to be reporting good numbers. But it is very unlikely that it can be something that can outlast an overall downswing in terms of the valuations that the sector is going through. So by and large, for now, at least for the next few months, I would argue that IT will continue to remain subdued. We've seen a decent run in the last few weeks preceding the results, and now that has been pretty much given up, and I think it will remain in that kind of range with a slight negative bias till there is greater clarity in terms of where the global economy is headed.
Okay, so that's the update coming in as far as how you should expect the numbers to come for the mid-cap IT space or the other of the IT names as well. But Anand, your take as far as some of these auto ancillaries are concerned. Recently, we have seen, marquee names get into the likes of Uniparts, Precision Camshafts. You also have JBM Auto, which is sitting at a 52-week high. Then Sundaram Fasteners, etc. These ancillary names, etc. have been doing quite well. Do you think this is a better way to play the consumption and the auto uptick?
Well, many of them are not very expensive at this stage. Perhaps you could look at it, but I frankly prefer to look at the OEMs directly. So the argument, for example, for having being in the auto ancillary space is that you should be looking at export markets, so you will be able to get a minimum basic presence and profitability from the domestic market, and then you export some, and you have got the world as your markets. The reality is that the world market is nothing exciting right now. So in fact, you've seen Bharat Forge, for example, again having to suffer because the order books are looking rather weak in the US market and so on. So without the international market, you are only looking at a domestic play. And I think at this stage, a domestic play in terms of the OEMs themselves is reasonably well positioned. So why would you want to go into a supplier where they will be the first ones to get squeezed out whenever there is a downturn, and they will not get the full part of the upside whenever there is an upcycle in the demand. So I still think that if you have to play auto, you are better off probably just buying the front-end auto companies directly.
Right. Anand, just wondering from an overall market construct perspective, whether you are a buyer, anything that you may have bought afresh in the last month or so?
So, near term, the market had got a little over, and therefore there was a case to be made for it to go up. I think, given the fact that the incremental news flow has been positive, with the RBI definitely going on pause, and it's very unlikely that having gone into a pause mode, you'll suddenly start raising interest rates again. The biggest factor, which was the fact that credit will become expensive and interest rates will rise, and therefore valuations have to fall further, at least from the domestic market perspective, has been kind of taken off the table somewhat, which essentially means that you are now looking at what's going to happen globally. So in a market where international prices are interest rates are likely to continue to head higher, and the US Fed is likely to continue to squeeze the balance sheet, there will be some pressure on equities, but not as much as we had till the RBI action came through. So the near-term outlook for India is a little more positive than it was, say, a month ago. And that would also be, you can also see that in the price action that you are seeing, that the stocks don't particularly fall below a point. The challenge, however, is identifying sectors which are relatively cheap, because most of the sectors where there is high earnings visibility have already been doing very well. So, for example, banking, which is going to be the largest driver for earnings for the current year, has already done quite well and is continuing to do well. I think there may be still some more upside because valuations are not that challenging. But otherwise, it's a little difficult to find sectors as a whole,
right,
in terms of where you can put new money.
Sure. Sorry, Anand, to interject there, but an important news flash at the bottom of your screen, wherein the entire, report regarding the change in the capital gains tax has been, regarded as baseless from the Finance Ministry sources. Now, this is what my, our reporters are picking up from the Finance Ministry, that they are saying that there is no discussion on capital gains tax in the finance ministry at this point of time. The news which has been, reported by some of the media agencies is baseless at this point of time. There's no confirmation on any such news from the finance ministry. So even the discussion doesn't seem to be on, and this is very much in conjunction with what the finance minister had told us earlier, because she pointed out that the entire ministry and the government right now is looking at bringing in more continuity when it comes to the tax law. They want to get away from all the policy ambiguity which is there, and are making sure that the FIIs as well as the Indian investors have that clarity with respect to what kind of compliances are needed, what kind of tax structures etc. has been put in place, because historically that was a worry point with a lot of foreign investors as to what's happening. In fact, I think Nikunj is joining us because he's had this conversation with the finance minister as well. Nikunj, your take? The reports are suggesting this is completely baseless.
Well, with all due respect to a media organization which is claiming that there could be a tinkering in the tax structure, I think this is more like a bolt out of the blue, and it is not completely substantiated. What we understand from our finance ministry sources is that as of now there is no proposal to change any kind of taxes. One. B, we must also appreciate and recognize that next year there is going to be vote on account. And since there is going to be vote on account, any big incremental changes to the direct tax structure is unlikely to happen. C, if one really takes the clock back, and if I may just politely remind our viewers about what the finance minister essentially had to indicate to us when we specifically asked the finance minister and the honorable finance minister on why was there no changes which were done on the capital gains tax. She said, look, the capital gain taxes were changed in 2018 and it is far too early to make any kind of changes. Now, why there is so much of speculation? The reason why there is so much of speculation is because in the finance bill, the total indexation for debt mutual fund was changed. And while the government in a sense has indicated that, look, the direct tax reforms is something which they are working on, and the fact that a lot of asset classes now are coming under the same tax bracket, why should equity get some kind of a preferential treatment? So as of now, what we understand from a last communication from the finance minister and from the finance ministry, that there is no proposal whatsoever. The minute this news came out, there was a bit of a speculation in the market and the markets came down. But looking at the context here, B, looking at the backdrop here, and what our sources are telling us, that we can confirm that there is no immediate plan to change the capital gain tax structure. The fact that direct tax reforms would be at play, this has been the stated objective of the government. They've been working towards that. But as of now, I go back to that same point. Our sources are telling us that there is no plan whatsoever to change the structure on capital gains immediately. Anisha?
It may not even, Nikunj, happen outside the purview of budget, right? If at all there has to be any change, it will happen in the budget, I'm guessing.
Yes, Aisha. We've historically seen that the big tax changes now happen in the budget, especially when it comes to direct taxes. GST and indirect taxes is something which do not need the budget forum, but direct taxes, whether it is personal income tax, with the exception of one big corporate tax cut, Aisha, which happened in 2019 because that was need of the hour, direct tax changes are normally not changed midway. B, there is no immediate need to bring back capital gains taxes because in last 12 to 18 months, it's not that equity markets have just gone one way. And C, I just take the conversation back. In the month of Feb, when we seeked our opinion from the finance minister, he said that 2018, the tax structure for long term was changed. It's too early because there's been a patch of COVID and there has been a patch of unusual drop and unusual recovery. It's too early for the government now to take any kind of a view based on just 3.5 years of data. I know the speculation there, especially after the finance bill was tabled, but I think we cannot link the change in capital gains taxes versus what has come in the finance bill for debt mutual funds. We should not confuse and link them.
Okay, Nikunj, so thank you so much for bringing in that clarity as well, and your take as to what we should make of these reports doing the round. But let's listen into the reply coming in from the finance minister when Nikunj posed the question as to what government's thought process was regarding the entire capital gains structure as well.
The fact that there was no change in the capital gain structure this time, can we assume that this is some kind of an endorsement by the government that equity will get a preferential treatment?
We don't want to keep changing too many things in too few short time. Capital gains tax, the last amendment was probably in 16 or 18?
2018.
18. And subsequent to that, ideally even 3 full years of not even gotten completed. So do you want to change the policy immediately? No, you would want to see how it works out.
Since we have Anand Tandon with us, let's take his opinion as well. Anand, what do you make of the reaction coming into the market? Any negative news, and it's been used as an excuse to sell into the markets?
Obviously, if you make changes in or if the market thinks that there is going to be change in capital gains, it has to adjust accordingly. As it is, the changes despite the protestations of the minister are too many and too frequent. So, and clearly the government, this particular government doesn't care too much about capital markets in general. So, from that perspective, I would argue that it is not. It wasn't as if the reaction was too severe. If you actually had any apprehension that there will be change in taxes.
Right. Okay, that's the take coming in on, this knee-jerk reaction that you're seeing by the markets, but just at the cost of even repeating ourselves, the news in some of the media agencies on this tax tweak is baseless, is what our finance ministry sources are telling us, and also saying that there has been no discussion on capital gains tax in the finance ministry, no confirmation of any such news coming in from the finance ministry. So completely redundant and baseless is what the finance ministry sources are calling it. For the market, we've lifted off definitely from the session lows, but just skirting around that 17,700 odd level. Kunal, you think we'll make an attempt at 17,800, which we decisively managed to climb up last week? Or do you think ahead of the key earnings like Reliance, ICICI Bank over the weekend, will be much subdued for the rest of the week?
I think we could be much more subdued for the markets. And I think that's what, Aisha, over the last 2 days, the markets or the indices are suggesting that they are not in a hurry to try and break out of the pre-resistances. So, the market mood in terms of in terms of the sectors is still, getting into that, slow and gradual upward tick. So, for example, you've seen Bank Nifty moving up higher over the last many days. Then now, for example, today, last week you had the real estate stocks which did pretty well. Sugar stocks did exceptionally well. Chemical stocks that had their own share of upward trend. Today you have the real estate pack, the pharma stocks which are emerging. So there is no strong sector trend which has been consistent for the markets in the last 1 week. It's more of a churn which has happened for the indices. And I think that's one of the reasons why I would believe that we would probably consolidate more.
Kunal, also give us your trade that you're executing at this point of time. Any closing trades?
6537.
So, Anisha, that would be on AB Capital. That's a stock which I think looks very attractive on the charts. It's confirmed a breakout about that 160 plus mark. So, looks very attractive on the short-term time frame. And that's the stock which I would look to buy as well as recommend to clients.
What's the BTSC trade that you are spotting at this point of time?
So that would be a buy on Apollo Tires. That's a stock just trying to break out in the near term. Last 3-4 days of range broken out. Stop loss at 327 and target price of 340. Second is a buy on BHEL, which has made a strong comeback today and a good momentum move. I think there should be some more follow up for the next few sessions. The stop loss at 74 and a target price of 78.
Okay, so that's the take coming in. In fact, we were earlier speaking about the entire auto space and how we have seen a bit of a reaction in some of the ancillary names. And Precision Camshafts is a stock which is up, 25% in the last 2 sessions. Of course, there was this news flow with a marquee investor, Mr. Vijay, checking into the counter. But I think my colleague Shrishti is joining us now. She's done some analysis as to what's the reason the stock is in focus, what are the triggers lying ahead for this counter, and why some of the investors are looking at this counter as well positively. Shrishti?
Well, yes, absolutely. The stock price of Precision Camshaft has been on the tear in the past.
2 days, the stock is already up 40%, and the recent rally is after Vijay Kedia, ace investor, has bought 1% stake into the company and entering into a 10 lakhs of quantity. Let's talk about firstly what the company is into and what is something that the investors are finding value add. Firstly, onto the company is into making the camshafts. That is a critical component that is used in the engines of the autos, and not just that, they have a market leading position, 70% market share globally, 9 to 10% market share, 70% market share domestically and 9 to 10% market share globally is what the company holds, but generates 70% of their revenue from the overseas markets. Talking about the clientele, name all the big auto OEMs, they have them as their client, but talking about the value unlocking of where the investors are finding value at, so that is in one of the subsidiaries of the company, that is a wholly owned subsidiary based in Netherlands, named EMOS. This particular subsidiary, what they are into, they basically convert the ICE-based CVs into the electric trucks. And in India, they have been experimenting. They have already introduced an electric bus named Orange Tiger. And not just that, they are also planning to expand into the LCV category. Into the next 3 to 4 years, they are planning to set up a plant. The second plant for EMOS is what the company is looking forward to. And even if we look at the financials of EMOS specifically, that has also turned profitable, because in Q4 FY22, when EMOS EBITDA was actually negative, if you will see, the company or the subsidiary has seen a turnaround from minus 8.3%. This is now turned profitable with EBITDA margins of almost 7%, and even the sales figure has jumped drastically over the years, and that is where investors are finding value at. And if you will see, the stock is really reacting to the recent performance of the company, as well as Vijay Kedia buying stake into this particular counter. Right, Srishti, we'll leave it at that. Precision Camshaft in focus, as is All Cargo, on the back of its restructuring, and today the proposed day for the company's spin-off as well. Ankita is here with more details.
That's right, Aisha. That's right, Aisha. All Cargo Logistics is in focus today. Indeed, the share price of the logistic major seems to have declined, but actually it is it locked in the upper circuit of 5%. It is showing a decline primarily on the back of the fact that the demerger or the spin-off has come through. And let's look at the restructuring plan here. The restructuring plan involves carving out of 2 more firms, and post the demerger there will be 3 separate listed entities that the company is planning. Now, the first entity would be All Cargo Logistics, which will house the core international LCL segments, the B2B Express and the 3PL contract logistics. The second would be All Cargo Terminals, consisting of the CFC and the ICD businesses. And the third would be the Trans India Realty, which is more of an annuity business of the logistic parks. Now, let's look at the objectives of the demerger. Now, the demerger's objective is aimed at decluttering the company and making it more structured. It also helps the business become more asset light, and also makes the core business also asset light and unlock the value of the demerged entities. Now, if you look at the revenue CAGR of All Cargo Logistics since the time of its listing in 2006, it has grown at a CAGR of 28%, whereas the stock price CAGR has grown at only at 10% since the listing happened, and that has primarily led to this demerger, because according to sources, the demerger happened because of the feedback that the company got from the shareholders, who said that a different type of businesses cannot be housed under one roof, and blended multiples hence remain very low for the company.
Hopefully that value unlocking does pan out now, with the multiples now, getting the valuation of the individual businesses rather the blended one as well. In the meantime, let's take a look at what the market is doing at this point of time. 17,660, so has been fairly range bound if you look at most part of the trading session, and we are ending just in the middle of that range. Pharma, of course, is the space to be in clearly. On the losing side, it's Power Grid, which is down 2.7%. Ultratech, Cement, Adani Enterprises, Titan are some of the other names which are on the back foot as well. But, separately, we spoke with the management of Thrive. Remember, Coca-Cola has picked up some minority stake in the company from Jubilant Foodworks. Jubilant Foodworks was in focus on account of that as well. They are talking about what kind of synergies can come from this tie-up with Coca-Cola. Let's listen into the management of Thrive.
Coca-Cola has a massive distribution pan-India today in the restaurant ecosystem. I think their direct reach is around 700,000 restaurants pan-India. Our primary objective is to essentially leverage this distribution to tap into and access a lot of these restaurant partners and kind of expand a lot quicker. Similarly, they have a lot of marketing assets on the consumer side that we plan to leverage for consumer outreach and to kind of scale up on that side as well. In terms of what we plan to do with Coke, to be honest, there is nothing specific that we plan to do with them that is specific to Coca-Cola. I think the core objective for us is to work together to drive higher attach rates for beverage sales in India for food delivery. The commission structure for that product is a flat 3% commission, and we charge a payment gateway charge on top of that. Now, bear in mind that the reason we are able to keep the commission structure so low is that for Thrive Direct, a restaurant is completely responsible for generating their own demand. On the consumer side, which is a consumer platform that we very recently launched, and this is only live in Mumbai today. It's currently in beta. We plan to take it out of beta maybe in June 2023. The commission structure is slightly higher. We're charging between 10 to 14% commission for all orders generated on the consumer platform. And the primary reason for that is because we are taking responsibility and ownership for customer support, for delivery, and for a lot of things like that.
Okay, that's Thrive, and post their deal with Coca-Cola, it seems like they're going to definitely eat up a little bit perhaps into the Swiggy Zomato market. But 3:30 is when we're going to get you live coverage from the talk of the town, which is Apple BKC, the big event, Namaste Apple, at 3:30 p.m. We're going to have our entire reporting team live from Apple's newest India store in Mumbai, which got launched to the public today, and a thumping response to that. So we'll get you all the snippets, a look inside what this new mega store is all about, what are the various products which are lined up, and yeah, a glimpse of Tim Cook himself. And Anisha, what a welcome he got.
What a welcome, and what a eventful days he's had, right from that vada pav with Madhuri Dixit to meeting Ambani and
Swati
Chandra.
Snacks.
Yes, at Swati Snacks. So from Apple to Swati Snacks, he's done quite a bit in his visit, and tomorrow, of course, he's meeting the Prime Minister. Expect more headlines as far as Apple is concerned. But for now, yes, maybe you're heading there after the show, BKC, the Apple store.
No, I'm not. I've got all my Apple products as of now. So yeah, unless there's a discount, which there is.
I guess that's not happening, right? Though
Yeah.
looking at the amount of people that were standing, one would have hoped there is some amount of, interesting
Sales
offers
jump.
lined up. But yeah, not clearly. But anyways, we are back to the markets and we're just around that closing bell time. So let's take stock of all that happened during the trading session. It was, fairly range bound for most part of the trading session. It's only the news on account of that capital gains tax that sent the market in a nosedive. We went to the levels of 17,600 thereabouts, but recovered a good 60 points from the day's lowest session, though the clarification coming in from the Finance Ministry that all such reports are baseless and there's no discussion at this point of time as far as capital gains rejig is concerned. Pharma, that was the space that we were all talking about. Look at what was happening with Lupin, Cipla, Biocon, they all were excited, and then real estate was the other one that was building onto gains today. So we saw names like Sobha doing quite well. You also had Godrej Properties, DLF, etc., which were up anywhere between 2 to 5%. What was on the back foot was clearly FMCG. So the likes of Tata Consumers, Britannia, etc. were on the back foot today. And then IT too deserves mention because the mid-cap IT was making quite a bit of comeback. So Persistent, Coforge, Cyient, Emphasis, and even HCL Tech ahead of the numbers was definitely excited. Reliance was on the back foot. The expectation from the earnings this Friday are moderate to speak of because the Jio numbers are expected to be flat, but the O2C business is expected to show solid improvement. So the street for now not baking that in, a cut of almost 1% there. And broader markets, Aisha, a lot of result reactions right from Just Dial to Quick Heal, and then the numbers coming in from Crisil as well as Schaeffler India.
Oh yeah, all those are seeing an earnings reaction. Just Dial managed to eke out gains of about 2.5%. the rest of the pack as well will come up on your screens. But the market's share had, sure had its share of losers as well. Starting off from Tata Chemicals, which lost about 6%, Power Grid, which was down about 3%, Tata Com, which lost about 2.6%, and then Ambuja Cement as well as PFC too, which did see losses for themselves in today's trading session. Just looking at some of the other laggards as well, and Anisha pointed out Reliance. There was also Bajaj Auto, Hero MotoCorp, M&M. So yeah, autos did not have the smoothest of rides today. Bajaj Finance as well fell about almost 1%, as did HDFC, and then ICICI Bank ahead of its numbers over the weekend, along with the big star performer from yesterday, ITC, after hitting that 400 rupee per share mark. Today it took a bit of a backseat, was down about 0.5%. But that's pretty much all the time we have on this edition of Closing Trades. Thank all our experts for joining in, and thank you so much for watching.